US tech stocks had a very strong first quarter following the sharp sell-off in the latter half of 2018. But can the momentum continue? Joining me now to discuss is Dan Ives, Head of Tech Research at Wedbush. Dan, thanks so much for joining us. So obviously a very strong performance, but we have seen quite a lot of downgrades in terms of the outlook for revenue from the FANGs. What should we expect from the second quarter in terms of share price performance?
Yeah, we continue to think the path is higher here, probably about another 10 to 15% on a lot of these names. Because what I think part of it is that fundamentally, I think you're seeing outperformance. I think numbers were set low going in 2019. And I think the street expectations and sentiment was very negative going into the dark days of late December.
So we've seen the race for the most valuable company really tighten among the tech stocks. Do you think Apple is going to overtake Microsoft for the top spot anytime soon?
Yeah, we do. I mean, we believe Apple right now, supply demand is what I would say stabilized. I think going into the cycle over the next 6 months in terms of not just the iPhone, but services, which we believe adds about $15 per share to the valuation. I think it's going to be a battle getting to that sort of $1 trillion market cap. But ultimately, right now, the ones best positioned are Apple, followed by Microsoft. Then you'd have to say Amazon.
So were you positively surprised by what we saw from Tim Cook and the team last week?
Well, I think a lot of that was kind of previewed or at least leaked. I think on the positive, I was happy to see the gaming side. I think that's a low-hanging fruit area. And I think they're sort of tipping their hand. There's going to be broader bundles here, which, look, in our opinion for services, that's the key as they get into streaming. I think the negative was the lack of details, but ultimately, we don't expect them to show their game plan 5 months ahead of launching. And I still believe a significant content acquisition is in the works at Apple.
So another stock that's really trying to get a slice of the pie of gaming is Alphabet. And we saw a big jump in spend last year. So do you think it can keep a lid on those costs?
I think that's going to be a balancing act for them. But when you look at gaming and Stadia, I think that's a smart move for them. Because, look, I mean, Alphabet's going after cloud, and they're going after the consumer market. And that's why right now it's sort of a battle for market share. I think investors want to see those margin improvements. But ultimately, I think a lot of it's about near-term pain for long-term gain on that cloud arms race between Google, I'd say Apple, Microsoft, as well as many other tech players.
So stocks like Alphabet, Amazon, Facebook, I mean, there's a lot of concerns about whether they might just be getting too big. Kind of taking a step back and looking at the big picture, is that one of the big risks out there, some antitrust intervention from the regulators?
I think right now that's more noise. I mean, you're seeing that especially in the Democrat 2020 campaign. I think investors are not as worried about that. I think more regulatory issues on the privacy, on the social media side, that's more of a realistic worry. But it continues to be worries in tech is China, one, which especially is over semis and Apple. And then I'd say regulatory in terms of social media. But in terms of antitrust, I think the bark's worse than the bite, at least at this point.
So when it comes to data privacy issues, is that one of the reasons why Facebook isn't up there among your top stock picks?
Yeah, that's exactly it. I mean, we continue to view regulatory as a worry out there. And you're seeing Zuckerberg continue to try to play nice in the sandbox, given the Beltway in Brussels. But that's why I look at names like Apple, Microsoft, as really ones that stick out front and center here on large cap. But obviously Amazon, especially on the AWS side, continues to have massive momentum.
So one stock that's been a real underperformer in the tech basket this year is Tesla. I think shares had their worst month in a year in March. So is this a good buying opportunity, or is there potential for further downside?
Look, I think near term, it's definitely rocky in terms of deliveries in Europe. I think that's kind of been the issue in 1Q. And there's a lot of near-term noise. We continue to be bullish on it long term. I think this is sort of a period for them to navigate. And I think the demand continues to be there, especially in Europe that we're seeing. But I think right now, look, this is a fork in the road period for Musk and Tesla to kind of get through this. Right now, it's a glass half empty view, but we think the stock could re-rate with a better performance, not necessarily in 1Q, but in 2Q and second half of the year.
We're now sticking with cars. A quick one on Lyft and its IPO. Clearly demand was very strong there on its first day of trade, but you only have a neutral rating on the stock. Tell us where you stand on Lyft versus Uber as well.
Yeah, look, Lyft, we continue to be bullish on that long term, although near-term valuation is more the issue there. Look, they're focused on domestic. It's a $1 trillion ride-sharing market. It's a massive opportunity, but I think right now it's more valuation, which is the worry for investors. But no doubt, this is the massive growth demand story for Lyft.
And what about Uber? Are you optimistic about the IPO there?
Look, I mean, that's one I think investors are really focused on as that kind of comes out. And I think that's really going to be the test for Lyft as Uber comes out into the public markets from a trading perspective.
And we saw the acquisition of Careem just last week. Do you think that was a good move in order to expand into the Middle East?
Yeah, Middle East is a massive market. I mean, remember, Lyft's only domestic, Uber international, and that's going to be a big growth area that they'll continue to go after in this $1 trillion ride-sharing market.
All right, Dan, thank you so much.
Thanks for having me.
That was Dan Ives, Head of Tech Research at Wedbush. I'm Victoria Scholar. Thank you for watching IGTV.